Here we go. So September 1st, market update. Cassie Viella, property manager, realtor, and investor here in San Antonio. And so like always, we'll start with the COVID updates. The trends seem to be going down. We have like the color-coded risk system, and it was on orange and now it's down in the green. So that's really, really good. I hope that that trend continues. Of course, nobody knows, but that's the state of San Antonio at the moment. And then I wanted to put this up again, the money available for tenants. So we've talked about it before. The sanantonio.gov website has a lot of really good resources. But then I also found this second link here has it's a PDF with a lot more resources. So not just the San Antonio one, but it's a whole list of different resources. And then also on that PDF, there was some interesting information about when there's a tenant who has a disability and how that eviction goes, and it's different. And I actually learned something. I didn't know that before. So I was reading about that. So you might want to check out that resource and see what you think about that. But definitely lots of good ways to get your tenants help. And then before we get into the local numbers, I did hear this statistic on a podcast this past week. And so I wanted to find the source and present it here. But we have a significant number of people who are 90 days or more behind on their mortgage. And what caught my attention is it's at the highest level since 2010. So that is definitely something to keep an eye on. It may be an opportunity here, in the near future. If somebody is, the nice thing is that people have equity in their homes. And so I think I said this last week, but I don't think that this will mean that we're suddenly going to have a lot of foreclosures in a couple of months. What I do think it will mean is we'll have a lot of people who have a problem that we can step in and help them with, right? So you want to be positioning yourself in such a way that you're there to help people who are in forbearance and this large group of people that are behind on their mortgage payments. And on to the local data. So showings are still going really, really strong, still comparable with last year. This is again showings of $100,000 to $200,000 homes. And then rental showings per week, again, still very, very strong. We haven't even seen, I would kind of expect a dip after school started, but we still have lots of showings going on. So rentals are still going very quickly. Weekly home sales. I wish I had the historical data. Sabor just started doing this one in for COVID. And so I wish I had like last year's. Maybe I'll dig around and see if I can find that information anywhere to kind of see if these, how these uptrends and downtrends relate to year over year. But you kind of see the normal dip after the first of the month because everybody got their closing in, before July ended, and then kind of normalizing again. And then the median price is still kind of steadily rising. So on these charts this week, I promised you guys last time that I would include kind of two different home ranges. So I'm kind of looking at the rental home, starter home, that buy and hold investors really like to have. And then I'm also including a little bit of a higher end home in case anybody's interested in flipping, just so that you can kind of see, the similarities and differences in those markets. So the sales price continuing to just rocket up in that in both ranges, really. I mean, you can see on the more expensive homes, we kind of were in a dip in that price range for a while. The homes were kind of sitting a little bit longer, and they were less competitive than the, you know, $100,000 to $200,000 homes, but you can kind of see that uptick there. That's changed. We're selling a lot of homes in that price range, multiple offers the first day. It's just as bananas in that price range as the lower one. And then this was interesting. These sales. So it's not enough for me to panic about it or anything, but I do think that that's a pretty significant drop there. And I do wonder if that is indicative of things slowing down or if it's a typical drop. I mean, if I'm comparing it to last year, you know, you would expect it to decline starting when, you know, when school starts, you expect sales to kind of decrease, but not this much. In both cases, it's a lot more dramatic than before. So it'll be interesting to get the numbers for September and see if this continues and what kind of market we're in then. But, you know, this might mean that it's going to be, you know, possible for investors to get in on some of these homes now because it's been so crazy the last few months, you know, that you guys haven't been able to find deals. So maybe this is indicating something interesting happening. And then these two charts, the month supply of homes, also that uptick, I mean, that kind of fits hand in hand with the lower pending sales. So for months, I've been saying like, we need more inventory, we need more inventory. And we still do. I mean, these numbers still indicate that it's a crazy seller's market. But I'm hoping that this slight uptick means that we're kind of stabilizing a little bit and coming out of that summer market. And then the days on market, this is a 3-year picture just because I wanted to kind of get an idea of over time. And you can see we're just exactly following the trend, the yearly trend that we normally see. So just extremely low days on market as expected. And hopefully that will change soon. Well, hopefully for investors that will change soon. I guess if you're a seller, you don't want it to change.